Alrighty, here we are. We can go ahead and get this out of the way. We're going to start on a weekly. Whether or not you want to choose a weekly or a monthly to start on, that's up to you. I really only peep at the monthly when a new month starts. I mean, I'll peep at it every once in a while, but it's really, to me, I get a little bit more information on the weekly. So this week was a really big week for ES. We did take out that 4,200 buy-side liquidity pool that we were talking about, which is really cool. Actually, I mean, I think we were down in here. We were kind of down in here when I first kind of got engaged on Twitter and I met, Henry and all you guys, and that was kind of like it kind of seemed like a stretch from that point, but it really only took this one weekly candle, and then after last week or 2 weeks ago, after that candle printed, it was kind of like we knew what was going to unfold, which was pretty sweet to see it unfold this week. So 4,200 was taken. A couple things that I want to note as we're playing in here. I'm going to take this weekly candle and I'm going to highlight some variables that are above us, and then I'm going to highlight some variables that are below us. And whether or not you want to take those exact variables or you want to, find other areas that you might see that are kind of aligned, it's up to you. I'm going to use this candle right here. This is an order block to me. We have a swing point that was in here. It is the up close candle before displacement lower that took out opposing liquidity at the low. So from there, I'm going to go ahead and I'm going to grab the mean threshold. Negative order block mean threshold. Negative means bearish, positive means bullish. We have the low, and this is all going to be rough. I'm not going to try to go get the exact digits, just so y'all can see what I'm doing. Negative order block low. And we've got the open. Alrighty, so above us, a couple things to highlight is we have this buy-side liquidity pool, the order block open, low, and mean threshold. If you want to note this volume imbalance, you can. It's above this mean threshold, so I'm not too worried about it. I like to understand that, where is current price? Where is the premium levels above me? Where are the possible premium levels below me and or discount, and vice versa? And I just try to see what's most what's the word I want to use? What's closest to price? I don't want to try to use, just because this is clear or just because there's a free value gap up here. I'm not highlighting that. I want to get to where price is at. I want to understand what's going on with price right now. So these are some variables that I'm looking at above us. Yes, I understand that there is a free value gap here. You have that SIBI. I'm not too worried about it because all of my variables are inside that. If you wanted to try to go find the consequent encroachment of it, you can. I can already gauge and see that the middle of it kind of lines up with this buy side liquidity pool anyway. If price does try to trade up a little bit more this week and take out this weekly high, then I would probably go and monitor it. Carson, do you take the free value gap high and low from the top of the volume imbalance or the bottom of the volume imbalance down to the low? I am not sure. That is something that I'm not sure. I think that that's more of a feel to feel. I've never experienced Michael talk about it, so I'm not 100% sure. Um, that's something that you as a trader would have to kind of go and study. I have not studied that enough. I really don't know. I'm going to be honest. But something that it is something to maybe look at. But other than that, going into what is possibly below us, we have previous week's high. Pretty easy. That should always be a pretty easy thing to get go ahead and put on your charts. Previous week's high, previous week's close. Bing bong. Love it, love it, love it. We need that. I'm also going to go ahead and I'm going to wait, but I'm also going to add, so there's a weekly and daily rejection block in here. The daily is a little bit better in my opinion. So I'm going to go ahead and I'll drag that other third level from the daily. Also, another thing to note, it has been 1, 2, 3, 4, 5, 6, 7 weeks. 7 weeks since we have taken out a weekly low. Not a single weekly low has been taken out. We just took out a big pool of buy-side liquidity. Every single seller since September of 2022 has now, considerably been liquidated in ES, and so that's something to think about. And if I go and I take you to past history in the market, last year when I was watching ES and we took out these May, April, May highs in here, look at the reaction. We had one wick, we had one weekly wick above it, and then we melted. That is not to say that that same exact thing is going to happen, but be on the lookout. When we take out those big pools of buy side liquidity on higher time frames, ES for some reason or another is pretty quick to the point and saying, all right, let's go get the other side of liquidity. So just kind of watch that. I'm not saying that this week's going to open and we're going to melt. I'm not saying that at all. I actually think that we will continue going up. It kind of looks like we're still in the middle of a move higher. I am still bullish. There's nothing that I have, just because we took out that liquidity does not mean that I am immediately switching sides to bearish. I need price to show me that it needs to shift otherwise. So I still am bullish on ES. On the weekly, I would grab previous week's high, previous week's close. If you wanted to study this imbalance, you could, and that kind of lines up through here. But other than that, that's really the only thing. You could also still use maybe the high of this candle. You could use the high of this candle or the equilibrium of this candle. But I'm not going to add too much on my charts. I'm kind of a freak about it. Some people like to add it, some people don't. But I understand that there are other areas of price that price could play off of. I'm just going to highlight what to me is the most valuable as to where current price is right now. So going to a daily, me and Henry were talking about too. We think that this is a mess up on TradingView. I wouldn't classify this as a volume imbalance. We think that the second you go to lower time frames, you don't really see that gap. So I think that that's just something on TradingView part. So keep it in the back of your head, but don't ride or die this volume imbalance either. I like the reaction off the buy side liquidity, how we spiked through it. We have not had candle closure, and then we had the failure to go higher and kind of shut the buy side liquidity, shut that down. This is the rejection block that I'm going to be using, the consequent encroachment of it. And basically from here, you go into here, you got negative rejection block, consequent encroachment. And from there, I'm kind of using this as an inversion model, and how that's another thing too. It's not just free value gaps that are inverted and use inversion models. You can use them in basically all the PD arrays. Excuse me. So in here, I've already got some confluence. We've got previous week's high aligning with the consequent encroachment of this rejection block. Now, this is something that I was meaning to bring up yesterday, and I'm not quite sure how to really look at this, because to me, I'm looking at this as a rejection block, whether or not you want to invert it or not. But in theory, this technically, and Henry, you can stop me if I'm wrong, but this could be a breaker. You have a high that's taken out, a lower low that's made, and then we make the high. So technically, I'm curious to see how this whole candle acts as a breaker. But I'm not going to get into that yet. Maybe when we're talking about breakers later in the call, we can kind of debate that and test that. But that was just something that I was looking at, and I was like, it's a little bit beyond my knowledge and my read on candlesticks, but I'm curious to know what other traders think about that. So from here, I'm basically going to just utilize the run going higher. So we had a down close candle, and the price came back up, closed above it. This is an order block in here, and then we have the run higher. I'm simply going to take from this low to this high, the most recent price run higher that took out the liquidity. I'm not going to use this low. I'm not going to use this low. I'm not worried about all that. I'm worried about the most recent price run, which is basically these past three candles, this week's price action. And so from there, I know that anything below equilibrium is discount, and anything above premium or equilibrium is premium. So I'm kind of noting how we have that previous week's high, that rejection block, consequent encroachment. We kind of have all of that stuff right around equilibrium, previous week's close. And we have a free value gap in here. There is free value in here. I like this filled. To me, I am going to remain bullish until I can see the 40-20 low get breached. If we can get closure below this low, and like this order block is kind of going to be its last line of defense coming off this buy side liquidity raid, and we're obviously up in that order block. Lower time frames, watch price. If it does go higher, watch it can fail to possibly go higher when it hits either the open or the low of that order block. you'd want to see price kind of um, essentially block orders going higher if we are going to go lower. So that's two areas to watch, 4190 and 4160, two levels that I would watch above us. And then below us, watching this free value gap, but I want price to kind of go into 4100. I like 4100 as I'm kind of looking into lower time frames, and we'll get into it. But like I said, this order block to me is going to be the last line of defense. You did have a shift in market structure, swing point high, taken out, liquidity. So really just, if we are going to continue to go higher, in higher time frames, it looks like we're in the middle of a run move higher. Whether or not I know where that move higher is going to be, I just have to maintain my bias until shown otherwise. That's the only way that you can go about it. And so for me, I'm still bullish, but I understand that 4,200 buy side liquidity has been taken out. So I'm not going to be opposed to shifting my bias, but I need something that's going to signal me to shift my bias. What are some things that would have me shift my bias? Well, 40-20, 40-40, all this. Really, if you want to get super specific, take this order block, and as long as you don't have closure around 40-59-25, as long as you don't get a candle close below 40-59-25, you should see price go higher. So that's something to think about. But I'm not going to add that there just because I want to focus up here. And if we are bullish, I don't think we have that deep of a retracement. Going into a 12-hour, kind of lining everything up. I like this to possibly get filled. If you want to use the consequent encroachment of that, you can. If I were to pull it out, I'll pull it out for just a second, but I won't leave it on the chart. You can see that the consequent encroachment of this is basically around previous week's high. So a lot of stuff is lining up in the chart for me on previous week's high. But notice how we're rolling off of this order block. I like to call it a rock stuck in a hard place. This is in between two or three solid discount arrays and two or three premium arrays. So it's in the middle right there. It's in a rock and a hard place. And so I'm curious. I would not like price to more so come back into this area. And if we do, maybe reclaim it a little bit. But knowing that price used the equilibrium of these three down close candles, oh, didn't quite hit it either, but got close enough for me. I'm not going to really sit there and fight that. It filled it. It went below the halfway point of this wick. Yeah, we already got below consequent encroachment. I would like to see this possibly hold. This would be FOMC's Wednesday low. Think about it this week. Last week we had Tuesday low of the week. The week before that we had Wednesday low of the week. We're making lows of the weeks, and I'll get into the profile after I've done kind of giving my little analysis. But think about that going into this week too. I'm curious to see if we can hold this at Wednesday low in here, and we can kind of stay in and around this. Just obviously watch the inversion of this, see if we can possibly play respect and go higher. And then note this, it's really just understanding the narrative. Where are the arrays and how can I study them narratively? That's going into the 12-hour. Basically, and on a short-term time frame basis too, take this high, take that high, or excuse me, take this low in here for the free value gap, and when price closes below it, watch how it acts in and around that level. Watch this. That's something that I would watch too. As you're watching price when it first starts opening the week, do we come in here and do we use it as resistance? And or do we close back above it? And do we use it as support? That's something to watch for too. Because that's very close to current price. And this is going to be a key level with regards to support and resistance. I'm going to go down to an 8-hour. Obviously, this was the liquidity pool. I'm curious, just looking over here, we have a smaller free value gap, a little bit more smaller, and you can see it's kind of already dipped into here. I can see us going down to start the week. I would want to see us maybe range a little bit. I'm not going to lie. A good thing that you can do as a trader is you can start to anticipate consolidative ranges. We had a very busy week last week. We had FOMC on Wednesday, and we had NFP on Friday. That's a lot of volatility injected into the market. Don't be fooled if Monday and Tuesday come and we're pretty slow. I'm not saying that, don't take that gun to my head, but something to think about. Get good as a trader to anticipate basically the consolidative ranges. We just took out a very key buy-side liquidity pool too, so that might kind of cause price to relax for a second. But still, same thing here. Watching this rejection block, consequent encroachment, previous high, and the previous close. I wouldn't mind, I don't care if it comes down into the close either, because we've got this wick. But on the 8-hour, you can clearly see now, it's very clear to me on an 8-hour that this has been filled. To me, this is a secured low. To me, this is a secured low. We have a swing point in here, swing point here. I would want this low to hold. This looks like a pretty balanced price range. You had sell side offered, buy side offered, and then we came down and even rebalanced the BISI. So that's something to look at. Order block. So this would be to me, this would act as some form of order block in here, high in there. But in reality, you could have also used this big down close candle. So these down close, this movement in here. So really looking to see if price can come into here, just dip below the equilibrium a little bit, anywhere in this level, and then I would be wanting to see price potentially make a run back higher if we are going to still be bullish. Now price could come down into here, get back up into this level, and there could be something in here on lower time frames, whatever the case is, that line up with this low or open and or medium threshold. We could still make a run up there, if we're still bullish. But look to see possible premium arrays in there and see how we could potentially play back down if we are going to go bearish. Because we could fill this, go back up, but for some reason, because we took out buy side liquidity, we could go lower. And so, have that in the back of your mind too, even though we might, if what we say plays out and it goes down, it touches all of the, rejection block, consequent encroachment, previous week's high, previous week's close. If we tap into all that and then we react and redeliver higher, you have to watch these levels to see whether or not we can get past them. Don't immediately sit here and look at the high and look at the order block mean threshold. No, look at the order block low, look at the open, look on lower time frames to see if there's any other premium areas that we need to get through. And you're trying to see price basically collapse through those things. And if they don't, be wary that, why would they not? Why would they not? Why would the premium raise respect instead of just going higher if we're bullish? Because we just took out 4,200, and that's a key buy-side liquidity area on a higher time frame. So looking at that on the 8-hour, going into a 4-hour, or to me, kind of got a little order block. This whole down close candle in here, we kind of took an intermediate high, filled free value very clean in here. So this is definitely to me a protected low. Filled it in here as well. This is filled as well. So to me, when I look at this stuff, how I'm looking to see a potential possible secured low is I'm looking to see if we have some form of fully filled free value gap. Both of these are basically fully filled to me. That's not quite fully filled, but I'll take it. So that's something to look at. Yes, I will, Ravel, not a problem. I will send it to you. Not a problem. So from there, basically we have down closure. You take this out, this whole down closure candle acts as an order block right here. Down closure, take the high, down closure, we take the high. So now, the same way price dipped down into here and respected the top of this down closure movement lower, I'm going to sit here and just utilize even this, that area, the same thing. I want us to run into here, run into these levels and potentially go higher. We don't have any breaker above this high either, so we failed to swing. So technically that's going to be, relative equal highs to me. It's going to be like a low resistance liquidity run. We don't have a breaker in there. It's not like this. The high didn't go above this high. So if we were going to long-term, If we were going to fall long term and hold these highs, I would have rathered that wick go above. I would have rathered that wick go above this level. Then that kind of changes my mindset on it. So just something to think about there. I'm gonna still stick to my gun and say 4100 looks really good to me. You know, even when we start to get on these smaller little ranges, 4100, all this, you know, in this area right in here, that's below discount. That's basically right at discount. And this was that Wednesday low of the week.
Can I say something? Sorry,
Yes.
person.
Yes, you can. Yes, you can.
And you are talking about this 4100 level. If you look at the 13th of September daily fair value gap, which was rejected at the beginning of December, now we passed through it and we are retesting it. And the high of that daily fair value gap exactly that level.
So you're looking at this right here?
Yes.
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 Yes. Yep. I noticed that too. Notice that. So on a higher time frame, you cut through candles. You're noticing this free value gap. And if I were to play this, if I were to just pull this all you out or all the way out, so you guys can see what exactly he is talking about. So basically, the idea that price is now going to use this bearish free value gap. We've closed through it. We now need to respect the top half of this as an inverted model. So now, you know, basically expecting the inversion of it. And now price is going to be sensitive to this low right here. This low that started the free value gap, that low comes at 41.1025, pretty close to 4100, which is right around there. So yeah, he's identifying and he's basically saying, now that price is closed back above this area, it now is inverted, which means price needs to respect the top half. It needs to respect the top half. It doesn't need to respect the entire thing. That's not good. If it comes back and fills this entire thing on higher time frames, to me, that's a little iffy. I wouldn't like that. I would need it to respect the top half. Also, if you look and see what is also the top half of it, the consequent encroachment is also the medium threshold almost of this entire wick, where it was kind of like my do or die, give or take for bearishness or for bullishness. I wouldn't want price to close below this this candle. That's because also, if you look, that's the premium of this bearish free value gap, and we want it to hold that top half as support. It now needs to play as support. You saw it act as resistance in here, act as resistance in here. We closed, filled the entire gap, used it as support, closed all the way through it. Now we need to at least use the top half of it. Does it have to get all the way to the consequent encroachment? No, it could just touch the top. It's going to be sensitive. It's going to be sensitive to it either way. So identifying those inversion models are very key. Good eye, Peter. Good eye. 4 hour, we were just kind of there. So just kind of monitoring that. We've just got this choppy price action in here. There's really nothing besides this up closure candle. If you wanted to use it as an order block, you could, because it was an order block that, or it was a up close candle that is pretty bulky and took out the key buy side liquidity pool. But there wasn't really clear displacement after it. I mean, we chopped around. I get it was NFP, but we just kind of chopped around, so it wasn't anything too crazy. And if I'm going too fast, guys, it's because I'm just trying to at least get it done within an hour. So hopefully you guys are following along. I know sometimes I can talk fast, but that's why I'm not really notifying and I'm not spending too much energy on this candle, because yes, we took out the buy side liquidity pool, but we didn't really displace crazy. You know, we just kind of hung around. Going into a 1 hour, would like to see at least, you know, half of this, if not all of it, you know, try to get filled. We do have a breaker in here. There's a breaker right in here. I would have rather this be taken out. You know, it's an intermediate, you know, term lows that we took out. The lows were taken out, and then we took out the high. So that's something that I might be watching in here too, this up close candle, which is right at like that 4100 level. Even in here, this would be kind of considered a breaker. You have a swing low that was taken out, and then you have the swing high. So there is a little breaker in here, right in there as well. So that's something. Once I get into the lower time frame, guys, I'm not going to really add a whole lot of stuff. But here, I will add, let me drag these over so you guys can see at least. Relative price. All right, now you can kind of see those levels again. So 1 hour, same old, same old. We are kind of just pulling in here. I do not see these lows holding. I don't think that that's, they're probably not going to hold. When it gets really sloppy up here, I try to cut and find the most cleanest price action I can. There really isn't a whole lot. Notice how, although if you're zooming in on a 1 hour, you've got this order block low right in the middle, kind of consequent encroachment of this free value gap. Looking at the open, you can see that we do have a swing point here formed at this open. So that's something to just monitor. Just bring it over a little bit more in here.
Okay.
Okay. So please so thank you. So basically I see us sweeping all of this. I believe we'll do that earlier in the week. So to me, I think that we might play around in here, fill some of this free value. I'm trying to think if there could be a sneaky breaker somewhere in here. I don't know. So I think we could chop around in here. These lows are susceptible to getting taken out though. We've got all this that needs to be balanced. So this would probably fall start of the week. Maybe push up a little bit and hold the highs. Then, just to induce some more buying and then take it out. But really only clear thing to me is this free value gap right here with the low, order block low at consequent encroachment. Going into a 30-minute, pretty clear. Just you've got a free value gap in here. You've got a free value gap in here. Really, the only thing that I could add into here is, cutting through. You've got candle closure right there. That's very clear. If we're gonna go and fill all of this stuff, I would like to see this high hold for now. And use this stuff as relative equal highs. And yeah, these lows do not look strong at all. So I think that we will take those out. 15-minute is really about, as low as I'll go with regards to potential pre-week analysis. No reason to go study anything else. Lower. Make sure you obviously do opening week gap. When that gap opens this week, just like we did last week, it helped us identify a bunch of stuff narratively within the chart. So when you do have that, really the only other thing that I could potentially identify on a 15-minute time frame is just identifying this shift right here with this in here. And you've got a swing point, and then right next to it you have a swing point. So this could be an intermediate term swing point, which would cause price to hold that high and go lower, which is what we would want. And then we could, and then hold all of this as liquidity. To me, that would be liquidity that we could possibly further take out. But I would watch this. I would identify this, identify the consequent encroachment of that, and then. More importantly, even that, if you didn't want to do that, kind of use this price action, cut through. So you can see right here, price is very sensitive to this free value gap. And then looking at this liquidity voided here, you could potentially see price come into any of these levels in here or some free value in there. So if price does start to go higher during the week, I would just watch for this area to see if we could push it back down into our levels and then potentially see that run. With regards, and last thing, and then hopefully, Henny, if you're still in here, I don't know if he's, yeah, he's still in here, okay. I want him to kind of talk about breakers for you guys. So the weekly profile, 1 hour. I will go back. 2 weeks ago, we had Wednesday low of the week. I'm going to go to this week. This week, Monday was the 30th. Monday. Tuesday, Wednesday, Thursday, oops, Friday. All right, we're gonna zoom this in. Oh, big text, big text. Let's just go to 20. Yeah, one more to Friday's close. All right, I'll make this nice and neat so at the end you guys can screenshot it if you want. So, no, it's not going to be picture perfect. Sorry for. All right, so you got Monday, Tuesday, Wednesday, Thursday, Friday. I know that there is probably an indicator out there that I could use that could have had me do that in 2 seconds. I am sorry. So basically what I'm going to do is I'm going to take simply the open and the close of each day. And I'm going to do this. I'm going to make sure I have a thick line. We used blue yesterday. We're going to use blue today again, I guess. Might as well. All right. Monday. Boom. Tuesday, we make the low, and then we close. Wednesday, we have a little in here. And here. And then Friday just ranges. All right. I'm going to go ahead and hide those. I'm going to come here really quick. I'm going to go to YouTube. I'm going to go to ICT. I'm going to go to his thing. I'm going to go to playlists. I'm going to go to mentorship month 4. I'm going to go to, actually, excuse me, it's 7. I'm sorry. I'm going to go to 7. I'm going to go to full playlist. I'm going to go to short-term trading defining weekly profiles, and we're going to go to Tuesday, low of the week. Classic Tuesday low of the week. I'm going to go ahead and I'm going to put this right here, and then I'm going to go ahead and put this right here. And I'm going to show you guys basically this weekly template. Now there's some things that you wouldn't think that you would know. So obviously, he does this in this manner to make it gray. This is what it really looks like when you really put it all together. All right. It's not going to be just straight down and straight up the entire time. It's going to be a little jagged. It's going to be a little gray in some areas. But understand that the Tuesday was made for the low of the week. I'll go back and I'll show you guys how basically if you're bullish and you have a potential Tuesday low of the week, you need to see that Monday hovers above a higher time frame discount array and drops into the higher time frame discount array on Tuesday to form the low of the week. How do you anticipate it? You need to know the higher time frame discount arrays. And when the market fails to drop lower into that array on Monday, odds are Tuesday will likely see the drive lower, London or New York. And so aside from just Tuesday being the low of the week, notice how what day is the high of the week formed? If you have a classic Tuesday low of the week, what day of the week is formed on the high? It's Thursday, right? And so if you knew in most cases that when you have a classic Tuesday low of the week, and you know that, if that happens, Thursday makes the high. When you're going into FOMC on Friday, as you should not trade, but if you're watching price or you're tape reading, or even if you are trading, if you know that, you go into NFP, on Friday, and Thursday is the high, what's that telling you going into NFP? Thursday gave you the high, you've got NFP, odds are NFP and or just the day in general is going to probably consolidate or go lower. and just kind of retrace back into the weekly range. So not only does that help you on possibly potentially being a buyer on Tuesday or Wednesday or even Thursday, but it allows you to potentially be a seller on Friday, because you know that week, that Thursday, is going to most likely be the high. Does it happen on all cases? No. There's always going to be that case where Friday just keeps on, you've got a really big weekly range and it rips. But that's something to think about when you're identifying the weekly profiles. So this is kind of what it looked like. I will come really quick. Let me find my object tree. I will put these back on. And Malik, I will get you those templates, by the way. I did not forget about you, brother. I promise. I will get those to you. So
Thank you, bro.
we had a higher time frame. We had a higher time frame on Monday. Notice how we're just kind of hanging around. Higher time frame PD array. Well, here's a free value gap. What does it do on Monday? It hangs around the higher time frame discount array. On Tuesday, it drops lower into it. What happens on Tuesday? After you drop into it, you have a shift in market structure. After you have that shift in market structure, do we have some form of balance? Price comes into here and rebalances. Institutional order flow entry drill. Dips into here. Uses this as a breaker. This is a breaker. I'm not even going to highlight that. I'm going to highlight the breaker. Henry's about to talk about breakers with y'all, so I'm going to sit here and identify the breaker. I'll sit here and I'll go breaker block. Bullish breaker block. Why is it a breaker block? You'll hear about it from Henry in a second. Positive free value gap. So knowing my templates, I can't type today, guys. I'm sorry. Positive free value gap. So knowing my templates, I'm understanding when I'm watching Monday and I look and I say, well, we didn't really fill in anything. Is there anything below us that's on a higher time frame? Well, yeah, there's at least a 1 hour and 4 hour. I know that this is on a 1 hour. I can see that this is on a 4 hour. So I'd be like, okay, well, we're kind of hovering over a pretty decent, higher time frame discount. We could very well have the Tuesday low of the week. I want to see how price plays when we get into this free value gap. Tuesday comes, we drop into the free value gap. I would also utilize the consequent encroachment. It's not going to be perfect because I didn't do that one, but I gotta get rid of this blue again. But so yeah, utilizing the consequent encroachment of this free value gap, obviously we nick it. How do we trade following that? That's the higher time frame that we're following. We know that Monday was hovering above it. We dipped down into it. Do we have a shift in market structure? You have to wait. Well, if you would have waited 3 hours, you would have gotten your shift in market structure. Price closed above this. Price took out a low. Price takes out a swing low and then immediately takes out a swing high. This up close candle becomes a breaker. I now need to watch how price trades inside this breaker. I don't need to sit here and try to see if it fills this full free value gap, because I have this breaker and I like to see my data supports that price has a clean breaker like this. Price is going to respect that breaker low. It usually won't even really shoot out of it. It'll stay inside of it. So on lower time frames, I need to find something more on the upper half of this free value gap to potentially see that institutional order flow drill happen. Then you can be a buyer in there, and then however you are as a trader, whether you hold throughout the weeks, you can hold it throughout the week. I don't even hold stuff throughout a session. So if I get in this trade right here, all that knowledge will pay me out. At most maybe this, not even really this high. Like I'm gonna just be playing these couple candles. So that's why you can have all this stuff and you have to use it to what fits you best, because I'll use all this stuff and just be in a trade for 20 minutes to 2 hours max. Would you consider those I'm sorry, I'm just now getting to this. Oh, you just asked it. Would you consider those down close candles as an order block where you marked price as the free value gap? Yeah, these 3 consecutive down close candles. Yeah, I would. I would considerably, have them as three consecutive down close candles, taking out a low with immediate displacement following it. Yeah, I could view that as an order block, 100%. So that's something that I would view. We haven't really came back and filled it. It didn't, it didn't need to fill it in a sense, because we once we had closure above the breaker, it went, and you could see price wasn't wanting to hang around. It had a range that it needed to fill, so it goes higher. So Wednesday, you're going into Wednesday, obviously you get displacement higher on Tuesday. Wednesday, we kind of hang around, start the day, you have that retraced Judas lower. So you have the Judas swing lower on Wednesday, but you know that Tuesday is most likely, everything's lining up for the Tuesday low of the week. So from there, you see that Judas swing, you see this free value gap, it can come and reclaim it. It didn't fully get filled, so it could come and reclaim it always. That's always a scenario. So, you know, you see that fill, that's that FOMC fill. And then obviously you've got this in here that it's basically going to take as liquidity. Going into Thursday, odds are Thursday's probably going to make that high. You don't know that high though, so just be system. Thursday would be a day where I would let Thursday play out. You know, unless on smaller time frames there was something clear. Thursday's the day where you kind of let it play out, and you know, potentially take Friday. Obviously, NFP was Friday, but if Thursday makes a clear high for whatever reason, and you see Friday like break down lower, you could potentially find some form of short in here. Once price makes this swing point, you know, I know it was around the lunch hour on Saturday, so it's not really a great time to trade, but you know, understanding that that Thursday high could potentially hold allows you to potentially gain some form of insight on what Friday could do. So that's going to be your weekly profile. Do we have any questions on that before I pass you guys off to Henry for a second? All good there? All good in Love and War? Love it. Sounds good. Speak now or forever hold your peace. Henry, are you there, my guy?
Yes, I'm here.
Are you ready to rock? Are you ready to roll?
I'm ready.
All right. Well, I will go ahead and clean up my charts. And while I do that, Henry, feel free to get the party started. Let me go ahead and real quick before you start, let me say hi to anyone new.
Oh, you gotta enable the screen share too.
Oh yeah, I got you. You're good.
How many new people do we have today?
We've got a
Here
decent amount of
yesterday.
people.
If anyone can put up a reaction, put up a thumbs up if you're new today.
Do it yourself. How you doing, buddy? Glad to see you in here. Essence, good morning. Good morning. How are you doing? I think we should be good. Do it yourself. Or no, someone raised their hand. E raised their hand.
E and iPhone.
Yeah, just a newcomer.
What's going on? How are you doing? How are you doing?
Good, yourself?
I am good. I'm good. Any questions? Any concerns?
No, just raising my hand for the newcomer.
Oh, okay. All right. Thank you. Appreciate it. All right. Well,
What you're hearing.
are you good to share today? Are you sharing?
Yeah, I'm putting it on right now.
Okay. All right. I just wanted to make sure I had it on. Breaker blocks. Talk to me, Henny.
All right. Okay, so we chatted about this a bit yesterday, so I think a lot of people, this may be a repeat for, but we'll go through it again anyway, because
I was gonna say we have a decent amount more people on today than we did yesterday.
Okay, so breaker blocks. Well, I'll say first that important thing is, and this is with any setup, is what is the draw on liquidity, right? So if we have a bearish sentiment, like we have equal lows, for example, we're not going to see a bullish breaker and look to play it long, because we're looking for a short setup if we have the equal lows. So the first thing that's important to know is what is our draw on liquidity, because that's going to shape the setup that we're seeing. And then here's basically the format for any breaker block that we see. So first I'll do the bullish breaker, and I've got bearish breaker. So the bullish one, we're going to have a low, high. The low is taken out, and then penny line there. Oh, that's kind of right. Oh, there we go. So we've got our low, our high, our lower low, and then the high is taken out. And on the best setups that we see, this low will occur at important times of day. We'll be taking out liquidity from this low. So here we have the sell side. And then we're going to take out sell side liquidity and move back through the high that we made here, the short-term high. And then when price trades back into the breaker, which we'll have established right here, it would really be on this side. It's going to be the highest up close candle in forming this swing high right here. That will be your bullish breaker. And so when we trade back above it, then we trade down into here, and you can expect price to continue higher as long as the narrative is bullish. So if we have equal highs up here, that's what we'll be reaching for. And then I'll draw the bearish breaker. So a bearish breaker is just going to be the opposite, right? So we're going to have high, we'll have a low, we'll have higher high, and then the low is taken out. And then we trade back to the breaker and can expect, oops, too many clicks. Price is getting lower. So here is, hold on, buy side liquidity. And the bearish breaker is going to be the last down close candle in this short-term low before liquidity is taken out. And then we're going to trade back down through it. And when we return to it, we expect it to act as resistance to price trading higher. And then we trade down into our bearish draw on liquidity. So if we have equal lows down here. So those are the two models that we're looking for. If you want to take a screenshot, go ahead and do that. And then I'll show you a couple examples on the chart.
And while he's doing that, guys, I will say if you want to go ahead after this video and you have more questions about breakers, it is going to be found month 4. It's going to be found month 4, episode month 4, episode 5. Excuse me. Yeah, month 4, episode 5. ICT talks about breaker blocks, just in case anyone after this video wants to go touch up and compare month 4, episode 5. I'm sorry, keep going.
All right. And I think one thing that's important to clarify, this was a question yesterday, is a close above the candle we're establishing as the breaker required to validate the breaker? And as far as I understand, the answer to that is no. It just needs to be breached, similar to a shift in market structure. A close is not required above a swing high or below a swing low. So as soon as it's breached, then we can look for accumulation to start occurring inside the breaker. And so a really powerful setup is when we see it paired with a fair value gap, for example, because then you can see accumulation, a dip into the fair value gap. Maybe we'll have institutional order flow entry drill there, and then we can continue to trade lower. I'll go into a few examples.
I would also say too, closure is just going to add confidence. It's not going to be it's not going to be like a validity thing. It's not going to add validity to it. But what it is going to do is, the closure, you would prefer closure over a wick, 100%. Closure is just going to add confidence, but still you could get that wick and it could still be valid. So it's something to think about going into breakers is, you're still wanting that closure for confidence.
Definitely. Yeah. And it will make it, if you do see the closure, it will make it clearer. But yeah, not a requirement to identify the breaker. So here is our first example. This is an hourly chart, and actually I have a 15-minute breaker drawn out here, which I'll show you in a second. But here we have our bullish breaker model, right? So we've got the low, we have the high, we have the lower low, and then the high is taken out here. We trade back to the breaker and then continue higher.
Dude, trades like that on the 1 hour make me wish I wasn't such a short-term trader, man. That's beautiful.
So
I would have had to
see the
get out
model?
during the lunch hour.
The low, the high, the lower low is taking sell side liquidity. In this example here, T2, it reached into a 15-minute fair value gap. So we're always going to liquidity or to an inefficiency. So we get that. We trade above the high, establishing our breaker right here. We trade back into it and then continue toward our draw on liquidity. And I'm going to break this one down into.
That's nice, Henry.
Who's that, Malik?
Yes, sir. What's going on, brother?
Hey, how you doing?
Finally got that boy Malik in here.
Yeah, you've been killing it on.
That man's
Yeah.
a gold. That man's a gold fiend.
Dude, I love gold so much, bro.
You're
you gotta
honestly
get
one
on
of
here
the.
and so show some of your gold trades.
I was gonna say you're one of like the one. A lot of like it's hard for me to even view. Like I can't even touch gold, bro. That's why I respect anyone who trades gold. But like I can't do it, bro. I can't do it. And when I see someone that actually can do it and do it consistently, I'm like, mad respect, mad respect.
Oh yeah.
Bro, it's literally just moving from one side of liquidity to the other side of liquidity, and you see a lot of the three drives pattern on all time frames. Like
Really?
every single time frame is very fractal with that. And then I also just use another confluence I use is divergence and previous week's highs, previous month's highs. This week we were at the yearly high, and we got a crazy drop on gold towards the end of the week.
I do remember we were in that yearly high. You're good, Henry. Continue.
Yeah, you gotta come on later and show some of your gold trades, man. That'd be.
Bro, I would love to, but these last couple weekends, I've been helping my family with they're starting a business in Lake Wales.
We're not going anywhere though. Trust me, we're not going anywhere. So
sweet.
You'll have plenty of time.
Yeah, I just brought my iPad. I'm on the road right now listening to you guys, but I'm over here trying to steal screenshots of Henry's breaker blocks. This is nice right here, guys. I appreciate y'all and all that you guys do. I'm going to try and translate it into gold and hopefully make it more understandable for the community.
Hell yeah. Appreciate you. Mad respect.
All right, so we'll dive down into the 15-minute chart here, and we can see on a lower time frame this example occurring. So we come down into the lower time frames because we can often reduce our risk on a setup by doing that and maximize our risk reward potential. So here we have the same setup occurring. We've got our low, our high, our lower low. The high is taken out. We trade back down into the breaker and then continue toward buy side. Right. So see the model? Low, high, lower low. The high is taken out. We trade back down into the breaker, which is that up close candle, and then toward the buy side. So what's important is we're paying attention to the candle closes, right? Even if most of the time, as long if there's not an inefficiency here, like if there wasn't a lower fair value gap, many times you could expect the breaker to completely hold price. So like we may trade down to the very low of the breaker and you'll see it respected well and then continue to trade out. If there is a gap, I like to factor that into my risk and allow for the opportunity for the breaker to get traded through and into the inefficiency. So if I were taking this trade on the 15-minute chart, I would look to be entering somewhere in here, but would factor this into my risk. So I would initially want my stop loss down here. And then it can be moved up after we trade outside of this breaker and we have a close above the bodies of these candles. And we continue toward buy side. So then you can move your stop to the low of the breaker. And then we have a fair value gap in here. We continue to trade higher. You can be trailing your stop up along those areas that make sense under your order blocks and inefficiencies. So this one, this is as far as we went on this day in terms of breakers, I think. Oh no, I can break one down at a lower time frame too. Yeah, so this morning price action, this was our 9:30 open right here. And we kind of just chopped around. This was a high resistance liquidity run here. There was an opportunity, but this is not really the action you want to be involved in. But if you're trading off the 15-minute or the hourly, there's a very clear setup, right? But what this tells us too, since we're inside this 15-minute breaker, is looking at this from the higher time frame bias. You can see that as we're trading inside here, our expectation based on the narrative and the market structure that we're seeing is for price to trade higher. And so even if you see a short setup occur inside of here, it's going to be a lower probability setup because the narrative is bullish and we're inside a bullish PD array. And so you would either want to avoid that trade entirely or understand that the time frame for it to play out is short. So you may want to treat that trade as a scalp if you're going to be taking it. So yeah, we just consolidate inside the breaker. So the breaker is the area where smart money is going to continue to accumulate positions in a bullish breaker, long positions, and in a bearish breaker, short positions. And so accumulation is occurring here, and then we trade up to buy side liquidity. On a 1-minute chart, we have another example here. So this is 10 a.m. right here. I think we may have had 10 a.m. news, I'm not certain, but we take out this internal liquidity down here. We have low, high, a lower low. The high is traded through. We trade back into our breaker and then continue to buy side. See that model again, low, high, lower low. The high is traded through. We trade back to the breaker and then continue on. So if I draw out the breaker, it's the last up close candle.
Beautiful.
And you see here, this is a great example of the precision and respect for the breaker. So the low of this candle is the exact low of the breaker block. And you can pair this with other confluences too. So here we have a volume imbalance. And we do have a small fair value gap down here. We also have a bullish order block right here. And so taking this trade, I would be looking to buy it down here when this is a down closed candle, showing respect for the volume imbalance. And I would, at this point, allow for a wick to be thrown into this imbalance, and I would have my stop loss from here. And then as soon as we trade above the body of this candle, my stop would come up to under the breaker. And then we trade on to that side liquidity. that make sense to everyone? Any questions on this setup? I'll go on to another example of
Seems like everyone's good. Rocking and rolling. Speak now or forever hold your peace. Don't be shy. Don't be shy. We're here to help you guys. So if there's anything that's confusing, I'll speak for my dad, and he texted me after you've reviewed that breaker. I'm throwing him under the bus now. He's probably sitting there smiling. He goes, it's just crazy how exact it is.
It is, yeah.
It is wild, and that's how this stuff really is, guys. Is like when you can look at it in the correct lens, you will find stuff that is like this. It doesn't. Will you hover? Do you have your open, high, low, close on? Yeah. What's the low of that candle? The lower the breaker, and what's the low of the retest?
The low of the breaker is 40.44. The low of the retest is 40.44.
Yeah. So like this stuff is exact. Now it's not going to do that every single time, but
no,
that's showing you. Yeah, that's showing you that's showing you the truth behind the algorithm and its delivery.
Yeah.
So
another thing we can see here as well, as you start to add confluences, there's a really small SIBI right here.
Yeah.
Sell side imbalance, buy side inefficiency. We trade back through it here. Trade back down to the low of it. You can see it supported there.
Price is now
It's
balanced.
also in confluence with the order book.
Price should not now. And so now price on that candle, what is it? 10.16, 10.15?
Yeah.
Yeah.
So honestly, you could even expect this as your support and
we do
certainly call it a balanced price range. Yeah, I guess you could actually, because we traded through here, then traded the sell side here and back up, moved away from it. So I think you could consider this a balanced price range at this point. So honestly, taking this trade, as soon as it trades through this volume imbalance and respects it, you could be a buyer and put your stop one tick under here.
Yeah, that's literally like a handle. Stop loss at that. Irvin did say he had a question. He said, in your studies for the breaker, where is the most sensitive part, the wick or the body of the candle? I don't think it matters.
I
haven't found
the bodies are with any sort of breaker block or order block or mitigation. The bodies are where the volume is conducted, right? So it's typically the most sensitive point. Just like on an order block, you pay attention to the wick, the high, and the body. The body is going to be the most sensitive point. So I believe that's the case as well with breakers, and that's what I've seen.
I think in anything, it's always going to be the bodies, but I don't think.
Yeah, I think it's always the bodies, but
that doesn't necessarily mean if something has a small body, that doesn't equate to the wick is going to be more sensitive. It's just going to be take it how you see it kind of deal, where the body is always good. The body in any aspect, in any theory and price action that we're learning, the body is where the volume is, the body is where the sensitivity resides. But there's going to be candles that have more body than some, less body than the other, but this, that, and the other. So, I mean, to answer your question, the body, but don't take that with a grain of salt and think that, it can't utilize the wicks either.
Yeah, the wicks are important too. And if you see the setup form and we have a clear draw on liquidity, you don't need to wait for the body to be involved in the trade. So you should understand that we may trade there. We may trade all the way to the low of it. We may even wick through into the inefficiency. So you should factor that into your risk when you're putting on the trade. But you can enter the trade before that, right? So as soon as we trade above right here on this candle, this is now our breaker. And so any down close candle that comes into this, you can be a buyer. So you can buy here. You could
buy any of them.
Buy the beginning of this candle. You can buy that one when it comes down. This one, this one, this one, this one, this one, and this one. So there's plenty of entry opportunities. Just depends how picky you are. And then you need to factor your risk into that and understand where we potentially could trade. So we could come down into here. we do have this area which we're considering a balanced price range now. So we're likely not going to trade lower than that. So you could have your stop loss as high as right here on the trade.
And your stop loss doesn't have to be like that tight either too. Like that's more of like you doing your own data, testing it, finding stuff to support it, and then having the experience and confidence to do something like that. But even then, you don't have to start to try to get it that small. Throw it at the low. Throw it at 30, 30, 40, throw it at 40, 32. That's fine. That's really where, you know, that's really where you want to start as a trader, is not trying to get the stop. Like, you know, understand your risk, adjust it how it needs to be, but throw it at 40, 32. It won't, it's not going to, you know, 9 out of 10 times it's not going to get touched. You know, the only time is when you start to really press your edge as a trader and try to refine that stop losses. That's when you'll get stopped out a couple times, this, that, and the other. Does anyone have any questions? Obviously, breakers. Henry, do you have any other examples?
Yeah, I've got a few others.
Okay.
I think,
Yeah, I just wanted to mention one thing actually.
Yeah.
So I guess another cool thing to note, I guess this is going back to Henry's point regarding the sensitivity of wicks and candles. So we see like at the 1010, you know, those candles right there, they're at the low of, you know, the bodies of those are at the lows of the previous candle for this sell stop liquidity, but just a wicks pass through it to guys confirm that it is going to be able to stomp out those sell stop liquidities, and then it just springs back up. So I think that was a cool thing to be able to, I guess, refer back to regarding what you were mentioning before.
Yeah.
Great the wicks can pass through it. It's not like an order block where the body has to confirm, you know, in another way.
100%. Good eye.
Another thing I wanted to mention too, you know, regarding these breaker blocks is looking at this particular one, we don't see it, but sometimes I do see it, where the wick sometimes does pass through the entire body and wick of the breaker block, but the body, I guess, closes maybe at the consequent encroachment or above, but the wick just touches below it. Does that make you feel nervous? Or
I'll show you a good example, because after Henry goes over the examples of the breaker blocks, I'm going to show you guys my 3 trades this week and kind of walk you through the trade management of mine. And I have a scenario that happened this week where you see me basically, I draw out an order, or I draw out a breaker block, and I'll even type and I delete it and I say breaker block isn't holding. And then it kind of is just kind of cutting through it in and out. It's not really respecting it. And then for some reason or not, it basically gets back above it and then respects it cleanly. And so, yeah, I mean, there'll be certain scenarios where you'll have that happen, and I think that there'll be a specific example when I go over that will show you, like, yeah, there's times where I have closure above a breaker, and then it kind of just goes back in. And I think it's also like, how bullish are we, how bearish are we, stuff like that. Where's the liquidity? What time of day is it?
This was the trade what you were tape reading live at Trader Roundup, wasn't it?
Yeah, that's one of them. Yeah, that's one of the ones when I held off.
I remember.
Yeah. I think someone does have their hand up though too. I will invite them to speak. Maybe, I don't know. Maybe that one.
The timing is important, but yeah.
Henry, thank you. May I have an observation? When we break above when we break above the breaker, and we have a valid breaker, isn't it right to observe other thing that we have also when we validate the break, we have also an order block also valid. Yeah, this one, the two consecutive bearish candles.
Yep, that's an order block.
So my question is, can we take the mean threshold to have our stop loss in this one?
Yeah, absolutely.
Yeah, that's what I did, because I took this trade right here. I was in this trade. You guys will see it after. And my stop placement originally was below the mean threshold. Mine was at 40. My stop loss was at 40.40. You'll see it. I had it right below that mean threshold. So yes, good eye.
Yeah,
because I've been seeing this every time we have a breaker, we have also an order block with it.
Because you're taking out.
So it's whatever your entry model is, right? So there's so many different concepts and tools that we can see and understand in the market and how price is delivered. So it's just whatever clicks with you, right? So like here, your model may be totally different. Your model may be seeing this as a balanced price range and buying that. Your model may be just this volume imbalance. Your model may be the breaker. Your model may be the order block. It may be something entirely different. If I look on a 2-minute chart, there may be a fair value gap right here. So it's whatever makes sense for you. And, you know, as you start to see a lot more of these things, you put them together in confluence to help you build out the trade and understand how you could potentially tighten your risk. But if this is your model, the order block is your model, then yeah, that makes perfect sense, and that's totally fine. Buy the order block and put your stop loss under the mean threshold. Or if you have a higher risk tolerance for it, put it under the low. Totally.
Cool. Keep going.
Yeah, time is important when doing these, and understanding that we have a clear draw, right? But you can see instances where
This trade
where
makes me want to throw up.
Where a breaker will potentially look as though it's failing, but we can maintain these on a chart, right? Just like how if you have a fair value gap, it may come back into play later, right? And show support or resistance in the market. So here we have a breaker block right here. So we've got low, high, lower, low. It's traded through right here, establishing this as a breaker. We do trade lower than it, but we come back above, we trade back into it, respect roughly the consequent encroachment, and trade higher. We come back to it later and respect it again.
Yeah, that makes me want to throw up thinking about that.
Oh yeah, that's the one. Sorry to bring that.
You're good. You're
showing
good.
that example, Carson, but it's just a clear one.
Gosh, that'll be one of the trades that I probably don't forget throughout the year. It was fun though. It was fun. It was cool.
Yeah. Let's see. Here's Fridays, and then I want to show a bearish breaker example as well.
Yeah, make sure they can see
both
what a bearish
sides of it.
breaker looks like.
So here's Friday. This was a beautiful setup. All right, so here's non-farm payroll that comes out. We trade through the sell side right here. It's it was a prior day low as well, reaching into a 4-hour and a daily fair value gap. So we're trading back, delivering to an inefficiency. We've got relative equal highs right here. We've got this draw right here and this draw right here. So our narrative is bullish. We were also still looking for, I don't think 4180. Oh yeah, it had already been traded. Okay. Yeah, so we were bullish on this day, but it was a Friday in our weekly profile, so we were kind of expecting to stay inside the range, not trade all the way back to these highs, because we can see that Thursday often puts in the high on the weekly profile that we saw for this last week. But we still have the bullish narrative. We have a clear draw on liquidity. These highs are too clean. Smooth edges are made jagged, right? So here's our breaker model. And you may see a different one because you could identify a few different breakers in here, right? So like here's a low, high, a lower low, and trades through. You could identify this as your breaker. Low, high, lower low, trades through. Maybe this is your breaker. This is the one that I picked. Because we have a clear price swing here. This is like our most energetic price swing. So we got our low, our high, our lower low. We trade up through it and establish this as our breaker. And now you can see we have this very clear draw on liquidity. We have a strong displacement through here. And look what happens when we come back to the break. We barely even bother to spend any time. Trade back to it and then off the races, right to our buy side target. So as soon as this trades back in here, that's your buy right there. Right on that candle, right as it dips back into there as a down close candle. And here I would be, there's a really small gap right here. So I would be placing my stop loss just under here. But if you want to allow the order block, you could put your stop loss under here. There's no reason to rush it up as long as you size your position appropriately.
Yeah, and I've realized too, like your stop loss placement, it's gonna be customized to you. You'll never be able to mimic someone's stop loss placement. You'll just have to eventually start to see and understand where and what ways within risk with where you can potentially see price be protected at. And to you, then it's just your risk appetite. Like you have to have that ability to kind of say, I want it at below the mean threshold. I want it below the low. I want it below the breaker. I want it below the free value gap. You know, you have to just through your data and your research find what fits you personally.
Yeah, right on. And as you learn more and pick up different things over time, that may adjust for you. But it's good to know and have confidence in where you're placing your stop loss and have it be one of those things where you just know as soon as you enter the trade. Like if for you it's under the mean threshold of the order block or under the low, like that's a great place to start with under the low, right? Because then it's easy to identify. You buy, I put my stop loss here.
Yep. I was gonna say when you're starting, where do you start? Start at highs and start at lows, and then work your way inside. Then maybe move to mean thresholds, and then maybe try out, you know, putting them below the areas of. And I think it also is dependent on the asset that you're trading as well. That's very key, is understanding the asset that you're trading and the behavior behind it. Keep going though, you're good.
Yeah, if you're trading something with spreads, you have to factor that in as well. With these futures, equity futures, then it's very precise, and the spread is only ever
0.5.
I think 0.5 is even high. Typically, it's one tick. Yeah, so you don't really, if you have your stop loss, this low of this breaker is 39.25. If you have your stop loss at 39 and it trades to 39.25, it's not stopping you.
Yeah.
If it trades to 39 exactly to your stop loss, then it may stop you.
It may. That's the thing. It still might not.
Yeah.
Which is awesome. It's cool.
Sufyan, you have a question?
Yeah, just another observation. I guess it's just me, getting micro into these analyses of tape reading. From what I've seen in the two last examples, this one and the one prior where Carson's like, oh man, this makes me want to throw up.
Do you remember that? Were you in the space?
Yeah.
You were in the space.
So I see here, right, there's this breaker block. And what I'm seeing is that even though there's a wick above that breaker block and it comes back, it kind of to me feels like, and of course, this is just how I feel in my observation. You can correct me if I'm wrong, but it's just an indication that it is going to respect the breaker block, but it's not definite. It's an indication that it will. I guess the only indication for me is that when it closes above the breaker block, just like the next candle, you know, it closes above it, the next candle right after that respects the breaker block. And this is my observation. And you can see the same thing before.
Yeah, and you can see how the different areas of it respond too, right? So like on this candle, technically you could be a buyer on this candle.
Yeah.
This 930 candle. We've already established the breaker block. We trade right to the low of it. And you could be a buyer on this candle. The only reason I want it is because it's the 930 candle, and
right.
It'll just fly. I don't typically want to participate on the first candle.
True.
But this is 931, and that's a buy. And something interesting to see too is with all of these PD rays, fair value gaps, order blocks, breaker blocks, anything that you can think of, we have our three main areas that are important, right? The high, the consequent encroachment, or we say mean threshold on a breaker or an order.
I always get those confused too. I just say midpoint.
Gaps and imbalances would be our consequent encroachment. But yeah, the high, the mean threshold for the consequent encroachment for an imbalance, and the low. So we've already traded to the low of it. At that point, we probably don't need to trade back to the low of it, right? So when this comes in and hits just around the high, you can buy that. And if you understand that and are really sharp with that, you could even put your stop loss right here. But again,
Correct.
It's important to do what you're comfortable with and what easily clicks for you, and what you want to be able to enter these trades without being fearful of it moving against you. So if this helps you to reduce your fear and make it easier for you to enter the marketplace when you see your setup form, then do that. Place your buy there and put your stop loss here.
If you don't mind, Henry, do you mind going back to the example prior to this one, where it's kind of like, oh man, this is really choppy. Probably don't want to stay on this one for too long, but I guess it's a good example, I guess, with what my observation is. But yes, that's a good point, by the way, that it's a balanced price range at that point, right, so to speak.
Did you want to see it on a specific time frame?
Yeah, I think it was like the 1 minute when you had it, where I was playing with
the later one.
I think the one right after that, the one where Carson was saying like, "Oh man, I want to throw up when I see this."
It was the one. It was that PM session one.
Yeah.
Yeah, it's right there.
It was right here.
When I was holding 7 handles for full terminus, and it got 2 handles away. Stopped me at break even. Yep, that right there was my demise.
That's triggering to watch back, huh?
It's right in there. 1930. Yeah. It literally came right back and hit my entry, but obviously risk management, I have to get stopped out of break even.
So like right here, this is a perfect example, I guess, with what I'm, trying to convey is we have the range of the breaker block, drawn out, that green candle. It sweeps below the sell stop liquidity, and then it goes back up into that range of the breaker block. But to me, it's just an indication that the wicks go above it, and it's not, and the candles close at the breaker block, if that makes sense. And then I see it crashes down, doesn't really respect it. And then when it goes up, and that last green candle where it closes above, the first time it closes above that breaker block, that's the confirmation that I'm going to respect this breaker block. So it goes back down and then shoots up. I guess this is really being micro observant.
Yeah, that's a great observation.
No, it's a good observation, because
those are things you should pay attention to too, because being picky is not a bad thing.
Yeah, like
right.
I was in that trade, and I got into the trade as price. Basically, when I saw the wicks, not the candles, so the first ones that go up and it just wicks it above, I started buying in again, and then when the price dropped out of it, I was monitoring the mean threshold, and I got respect from it. But then when price and that's where, and sometimes it will kind of do that. It will kind of chop around it for a second. But once we got that closure above, even though I already had entries in, I added like 1 or 2 contracts. I think I had like 5 contracts in prior, and then once we got that closure, retraced back in, then I added some. Was that me being a little bit impatient? Maybe. Was that me being a little bit too forward thinking at the moment? And kind of that's my experience talking and kind of seeing that we were already kind of had some form of willingness to press above the breaker block closure or not. I had a feeling that low was going to hold either way because of how relative equal those highs are to the left of it. It's a combination of both, I would say. To try to figure out why we didn't respect it following the wicks. It takes a lot, to me, I'm not 100% sure either why. It was I think it was just such a high resistance day. It was the day before FOMC, and it's just I guess it's just the best answer that I could kind of see that playing to this particular thing was just super high resistance, and it's got basically nowhere to be and all day to get there, and it's just going to kind of hang around.
Can I say something? Maybe you were confident with this because there was, if you go a little bit more back in time, like a couple minutes, there was another breaker which was already respected at 11:57. That no, yeah, to the left, more to the left.
Yeah, right in there. Right there.
11:50. No,
Yep,
11:57. Yeah, right there. And so this week down on at 13:23, that was my entry on this breaker block. And after this, I think you also saw this. And since this breaker was respected, it indicated up move. So maybe that's why.
Good eye. Yeah, totally right.
That's a great trade.
Great observation, Peter.
Thank you very much.
Yeah, you can see a lot of them for him too. This one here. Here's your price swing. Low, high, lower, low. The high is taken. We hit the lows.
Look at the exact lows on that. They line up. The lows on that last breaker you just put.
This is what I talk about with the volume imbalance is acting as a magnet. This was left unfilled. We come back to it, fill it, and then continue.
That was the despise. If I wasn't talking on that Twitter space and I was trading by myself, I probably would have bought back in. But I had to be a good, responsible trader in front of all you guys. I'm not gonna lie. But that was really annoying because that 40.76 level, I think it was just so clean. It was ready to be taken too. Got the best of me though.
There's another. Or this one here.
Braylon said it hit the VIB perfectly. Yes, it did. Yes, it did.
Yeah. So plenty of setups there.
George says
it's fun to just go through a day on a 1 minute chart and pick out every setup that you can find.
Oh yeah, that's how you grow. George says it's crazy how much confluence there is because I never seen breaker blocks. All I saw was your free value gaps is why I took that trade. Yeah, see, it's all about the eye. You know, it's all about what you see as a trader.
Man, I started using breaker blocks like I don't know 2 weeks ago, and I can't believe it. This is my favorite. Like this is my. I base my entry model on this. This is my gold standard to go to.
Breaker blocks. I said it last week. I commented on one of Jeremy's tweets because he said something about the breaker blocks. I said, me and the breaker block are never breaking up.
I love that.
We're not breaking up.
You know, ICT didn't really talk about this in the 22 mentorship, so that's why people didn't.
It's been around, but it's new to a lot of people because a lot of people only really know him through his 2022 mentorship. But
yeah,
that man, if there's anything that man has, it's a lot of tricks up his sleeve.
Yeah. The last one I'll show is a bearish breaker block. We've got our equal lows right here. We purged these highs. The only thing that was a little uncertain here is these being relatively equal, but on our weekly profile here, let's go to the daily chart. We had, okay, so Monday was a holiday because we go Friday right to Tuesday.
Henry, please, may I ask a question? In your last example, before the one that gets Carson to throw up, could we just take it? Yeah, we have a low at 850, I think, and we took the sell side liquidity. Yeah, on this one, could we consider the highest high between the lows, the low that takes the liquidity and the original low? So could we take the highest high between the two lows?
The highest high. Are you talking about this candle?
Yeah.
I'm on an hourly chart here. Would you consider this a breaker?
Technically, It was.
that's-
It may be a bullish breaker.
That's what I actually was bringing up when I first started my analysis. I wanted to debate that.
I think technically speaking, yes, but I mean, let's look into this price action and see how it responds right here. Because I would think.
I think we'll figure out this week. I think this week it'll be a time will tell type of deal.
Oh yeah, did we just race through it right here? Oh,
Yeah.
this was FOMC, so we just went right through it.
Yeah, we went right through it.
I may consider this more of mitigation
Mitigation.
at this point because look how extended this move is.
Yeah.
So we made a low, we made a lower low, a lower low, a lower low. If I'm looking for a break or block, I normally just want to see the energetic price move, a single low made, and then take out the high. But let's
it's a great candle to study. This is how you learn is you take that candle and you don't forget it, and as price trades back into it this week, you study it. That's one thing that I'm going to be doing. That's a candle that I got on my radar this week too. Because
on my scope too. On my scope.
On your scope, I love it. Because I mean, whether it's a breaker block or mitigation block, really tomato at this point, you want to see that thing go in there and you want to see it potentially hold a support. Whatever you want to call it, you want to call it. But to me, that's really the moral of the story is understanding, hey, does price go in there? Are we sensitive to it? Do we deliver into it to react going higher? Or if for whatever reason we do close below it and we do kind of collapse through it, do we use it as resistance? Two things that you just got to focus on.
Yeah, and this is what is on the 4,100 level. Yeah,
yep.
That's like a sensitive point for us. Yeah.
Man, I'll
so
tell you what,
this is the
though.
body of that candle. We traded through the high right here, and then this is the consequent or the mean threshold of it. So once we're above it, it's acting as that mitigation block. So above trades back down. This is an opportunity for anyone who was taking this short to mitigate their losses. If they took it short through here and then the trade's higher, they can mitigate their losses right here. And then we continue trading higher. So yeah, I mean, even on FOMC day, this was potentially an opportunity to buy right here in the mean threshold with your stop loss under the low.
And I kind of like that we left that. I'm not gonna lie, I kind of like that we left that fair value gap right there open, the bottom half of that free value gap right there. Yeah, I like that we left that open because we could come reclaim that and fill that all and then find a low. Because there's liquidity at that low now too. You know what I mean? So we might come and just wick at that low that we made and then go higher. Just something to think about. I'll tell you what though, guys, I'm having fun hopping on these calls with you guys and just seeing how the weeks play out.
Likewise.
I've been cooped up all by myself trading for so long. I forget.
Yeah, me too. Thank you, guys.
I forget how fun it is to just, even though trading's always going to be a super individual thing. It's an individual sport no matter which way you want to turn and squeeze it. But it's fun being able to get on here and just collaborate.
All right, let's see here. So we've got our equal lows, more daily lows here and here, and then this is where we traded to the last down close candle in this order block. So inside of here, we identify this as an hourly bearish breaker. Let's call it which one. So we got our, hold up, maybe looking at the wrong one. Although this is the energetic price swing right here. So yeah, we've got our high, our low, we make a higher high, and then we trade through it. So this whole thing is that high. This one's a bit extended. So this one's kind of like one of those fuzzy ones in a sense. Maybe you would consider this mitigation instead, but we do trade through it. And then you can look into this area to potentially find the short setup. On the 15-minute, $15. There was one that was clear.
Might be on the 5-minute.
I think it was, yeah, it may have been a 5-minute. Let me do a replay. Yeah. So where's 9:30? Right here. So we have this move down right here. We have our high, our low, our higher high, and then we trade through it. So we can identify the last down close candle as our bearish breaker on the 5-minute. We trade through it right here, then trade just back up into it right there. That's your sell, and you target the equal lows. That's on a 5-minute.
Cheeky.
And let's see a 1-minute example right here. We've got this price swing, we've got a low, high, oh, hold on, high, excuse me, a low, higher high, and then the low is taken. We trade back up into it, right into the mean threshold, and then trade lower. See if I can find another. There's another. Our high, low, higher high. We trade through it, tags it. There's your sell. Stop above here, and we trade lower. So we'll see them form again and again.
Yeah.
What's most important, and that we keep in mind though, is you have to understand the draw on liquidity, because not every time that you see this occur is it a high quality setup, right? So let's see if I can find a bullish example that fails. Yeah. So if we took this low and this high and drew this out as a bullish example, not understanding the draw, then we have the low, the high, the lower low, the high is taken, and it fails because our draw is down here.
That DOL is key.
So it's important to understand. And then you see inversion in a sense too, right? So this fails, it negates the bullish PDRA, and then it turns into real resistance in confluence with this fair value gap, this bearish order block. I think it's just there. Oh, one tick above it, but inside the wick. And then you have the bearish cell. Any questions here?
Seems like we're all good. So that's breaker blocks. Obviously we will be recording this. You guys can go in and kind of rewatch this, and we'll still be touching up on them, even though each week we'll do something a little different. We'll always, try to eventually recycle what we've already talked about into whatever it is we are still teaching. So we'll kind of add breaker blocks onto the next study. Do you guys want us to look at charts for you guys, specific things that you guys trade, and get our takes on it? Do you guys want us to, I mean, I can walk you through my trades this week that are on Twitter if you guys haven't already seen them. What's most beneficial to you guys? Great, thank you, appreciate it, George. What's more beneficial to you guys? Do you guys have specific charts that you guys want us to give our opinions and takes on? Do you want to see, I can walk you through the 3 trades that I took this week. It's up to you guys. It's really more so open to the floor for people. If you guys have the if you want to share
I would
charts,
suggest let's go through your 3 trades of the
Yeah,
week.
I was gonna say that
Nice.
same thing. I want to see yours, Carson.
Okay, all right.
Definitely trades.
Cool.
All right, I will go ahead and start. So first trade of the week was the 31st, 1 to 2. I had 7 contracts, 2 were partialed, 5 were stopped at about 12 handles. My terminus was not met, and it was about a 2%. This was that. So this price action, now that we're talking about it, I'll do this stuff towards the end, so you guys can already kind of see what we've been talking about. This is obviously something that we were just talking about. So I'll go ahead and kind of play it. And I'll kind of stop and walk you guys through my head process. So I'm getting in, I'm basically buying in now. I've noticed that price has already taken the sell side liquidity. I'm leveling out that potential mean threshold to put my stop there. And then basically I have this very right there partial, and then I have a partial up here. And then I'm holding for that 40.76 area, which is that new week opening gap. That was my terminus. So you'll see me take a partial off here, you'll see me take a partial off here, and then you'll watch and try to see, and I'll kind of explain my stop movement here. So I'm labeling this candle as an order block. If you can kind of see right here, price, once we kind of push above it, we do kind of test it here. It's both the candles, I understand that, and I'll move it up there to show you guys, you'll see me move it. But I'm also identifying that singular candle as well. It's just me looking at both of them, and there's usually a lot more things that I'm looking at than I'm highlighting. You can see I'm highlighting just a significant shift in structure. I'm noticing we've closed above a breaker and free value gap. I think the free value gap that I'm using is right here. The breaker's in the past, so you can't really see it. So I've got 6 contracts. I just took off 1 right there when we pushed up there. So when you see me gray out a partial, that means I've already taken it. And if you guys also note really quick, if you note, this was the breaker that Henry had just outlined. I'm not outlining it there, but I couldn't even tell you if I saw it or not. I mean, I'm looking at so many things, but that is kind of that beautiful breaker from exact low to low. So just to keep that in mind too, even though it's not on the chart. I moved that order block to kind of show you that that is a viable low. So I moved that order block to show you that that is a secured low. I moved my stop to break even. Now I sit here and I see this as a free value gap, shifted market structure, want to be taking the partials, and we'll keep on going. I don't want to see this fill. We offered sell side and buy side. So to me, that's balanced. And I'm also seeing that we're at like the 10:30, 10:45 hour. I want to see price start to run if it's going to. I don't want to see deep retracements. That's why I'm also not wanting to see this fill. I would rather see, the more shallow retracements.
Carson, did you consider it as a propulsion block?
Which one? This one?
Yeah.
Yeah. I would have considered it that because it's coming into this order block. Yes, this would be considered like a proportion block. And so I'm just monitoring this free value gap, consequent encroachment, keeping this a little in profit, but just trying to keep this a little bit below this free value gap at a whole. So now I took my partials. I say I'll hold 5 for terminus, but you'll see me move my stop loss up a little bit more. And I'll show you when and why. It's still below the free value gap. I'm wanting to see price trade above this level, and now I want to see these 3 candles act as support. I now move it to the midpoint of the free value gap now that we've pressed away. So I'm identifying this in the mean threshold. My stop loss is now at the consequent encroachment of this free value gap as to how we traded into it and then away and broke the high, as well as displacement. So I've got the displacement as a cushion and the medium threshold of the order block as a cushion. I'm highlighting 11:30 because that's usually when I like to get out, but you'll see me when it's being this slow and it's very high resistance, I'll try to hold it a little bit longer. The longest I'll hold it is 12. And this is just super high resistance market conditions. This is why you're seeing things kind of stay around, cut through. Notice how my stop loss is now 25 ticks. It started at 7 and it's slowly making its way up. I'll move it down a little bit sometimes just because it's, I don't want it to take me out. We're starting to kind of get up there. Now I want it right below this order block mean threshold, right at the top of this free value gap. Anywhere in between these 2 levels, I would prefer to now see price kind of run. If we don't reach terminus by 12 p.m., I will close price at whatever it is. To me, this now fully acts as a breaker. So now price goes below the breaker at 30 ticks. And now once we're pushing away from it again, I'll start adding 5 ticks, 5 ticks. Now we're at 40 ticks. Don't want to push it in too much because then boom, I was fine of pressing that pedal because we were pressing into 12.
I'm sorry, Carson. Why would you consider that a breaker? It doesn't have a lower low.
Yes, well,
on the right.
So here, I got you. This is why I kind of identified it. So you have right here, you have a low, there's a intermediate term low in here. Technically, you could consider it a mitigation block maybe. I viewed it as a breaker just, real time, just because I saw this low being taken out and then the high being taken out. And then we kind of chopped through it and we started getting closure above it. So I was just basically utilizing the idea more of the bottom respecting. But the AM session had nothing to do with the new week opening. And that's why you saw me get stopped out at like 40 ticks. And then PM session, I'm having the same target. This was the one that per se made me want to almost throw up. So this is kind of me identifying. This was stuff in the AM session. I think this is what kind of stopped me out this run in here. And then you have the lunch hour. You do have sell side liquidity in here. You have a previous day's low of January 27th that had a little free value gap with this. And you had a sell side liquidity. That was my original take. But when I saw price come into here and take the sell side liquidity and have a willingness to kind of already start to go in here, I'm going to be using this as a breaker and using this as a mean threshold for the order block. First, stop is going to go somewhere in between the medium threshold and the low, somewhere around there. And you'll see it kind of playing in around it until we kind of actually do get that close. This was an example we just kind of saw. But you'll see me start with 6, add 1 more, and then I try to hold it the entire way. And it should be a good lesson to you guys as to why you shouldn't be doing that. And I got close. I'm not going to lie. It was close. It was fun. But that's why I take partials. Because I used to do that stuff all the time, and all it does is give you a headache. So we're finally closing above that breaker block. Now I'm going to move it to that low at my stop loss at the low at the mean threshold of it. Me showing you guys that those highs, they never hold. Gonna now move my stop loss above that breaker block because we've traded now far away from it. We've got kind of a free value gap as a cushion. Now it did kind of signal to me that we did not dip into that free value gap, and we started trading away, that kind of already threw a red flag. I didn't mention that in the space, but it threw kind of a red flag to me because I would have liked to see price balance something, but it didn't really balance that. And that's why I kind of, not really, I'm not going to say I expected price to come and take me out, but it was just one of those things where I knew I was stuck in a rock and a hard place. I didn't want to trail my stop because I was trying to hold full till terminus, and I didn't want to get a stop profit taken halfway there. It's either all or nothing. So as long as the risk is off the table, it's either zero or everything. I'm just kind of identifying equal highs up there, showing you guys resistance. Yeah, right, there's no way that's resistance. Price starts to kind of range above that free value gap. We take that sell side liquidity right there. So I'm trying to see if price can get back above those highs that are noted. Looks like it's wanting to dip into that free value gap, so I'm pulling out that consequent encroachment to be able to try to read it. So at this point, I'm just bumping my stop loss up a couple ticks, and I'm basically going to utilize that free value gap as a potential stop profit because we were trading so close to the terminus. I thought that we were going to be able to get it. When we start to take those highs, I'm pretty sure I bumped my stop loss up a little bit, but I think I move it back down to break even when we start to collapse. So I'm identifying a possible breaker block right there. Even though technically I think it might be considered a mitigation block, I'll have to freshen up my take on that. And once I saw it give way to this free value gap, a part of me thought, I was like, oh gosh, here we go. Because once it gave way to that free value gap and that breaker block in basically one candle, I was like, oh, here we go. And then you'll see me kind of trim my stop profit down a little bit because I didn't know if it was gonna, I knew that that free value gap hadn't been played, and so I had a feeling that we were gonna go below it. And then obviously nobody's perfect. Hopefully that was insightful as to why you should take profit along the way. So we had on Tuesday, we had that little tiny AM session long, then the PM session long at break even, and then Thursday, was it Thursday? Thursday I had this, which was the run into 4,200. So identifying that we have clear relative equal highs, identifying that we have a previous day's high free value gap in here. And notice how I'm quick to, I didn't expect it to be an institutional order flow entry drill. I saw that we had, I think I used this as a breaker. We take lows and then we finally started closing the highs. So I used this as a breaker. You'll see me pull it out. But I was expecting price to actually dip and tap the previous day's high, but I still allowed myself the entry right when we get in here. And it just, honestly, it happened to be an institutional order flow entry drill. So it's kind of like understanding the, my execution allows for that. My stop loss, I think, starts right below the free value gap. But you'll see me buy right in there, right as it taps in there, stop loss below the free value gap. Shifted market structure. Breaker. Notice the nesting of it. There's a little tiny overlap between the breaker and the free value gap, and that's where price is the most sensitive. Pulling out my mean threshold to start to follow it. My stop loss is now below the breaker because we have now closed above the breaker. I'm showing you guys that it has to validate. For me, I need a candle closure to really have confidence and validate the order block. Even though I already saw it pull out, you'll see me add more contracts as we dip in. Even a little bit, I think I add one before the closure and one after the closure. That's just experience when I can see price already starting to give way to the top of it. But I'm identifying it has to close for price to really validate the order block in my eyes. But you'll see that. Just identifying the IOFED. Notice how it's just playing around the high. Now at this point, this is where now I'm going to start adding anything that, yeah, right there. I just added 2 more, and I think I add 1 more too on a test. When it comes down into that order block open and low, that's when I'm going to add more. I think I add 1 more right here when it dips back in. Right there. Yep, just added another one. Now I'm playing that partial. I take 3 and hold 3. 3 off, risk even. And at that point, because it's such a big liquidity pool, I'm wanting price to get there. I'm wanting price to more so not try to offer a whole lot of more buying. I don't want the algorithm to offer a good price. What would a good price be? To me, I don't want price to come back down into 41.74. I don't want it to come back into these levels. It's so close to that liquidity pool now. It did a lot of its chopping up in the at the 9:30 bell. I want kind of that spool action. I almost got it back in right here on an institutional order flow intra drill, but I just didn't really. It was my last trading day of the week. I didn't really want to try to, cause myself a headache. I was just gonna let the 3 run. But I wanted actually to see that fill. I should have annotated it because prices now, I'm wanting to get to that level pretty quickly. I'm wanting it to not offer some form of discount price to anybody now that we've already done a lot of our chopping. So that's just stuff that's going through my head. After seeing these 2 candles, I wanted basically at least the majority of the top half of these 2 free value gaps to kind of hold. Definitely did not want to see this one fill. Definitely did not want to see this one fill. I just wanted price to kind of make its way back up into here, and that's kind of what it did. So this one wasn't really a crazy hard trade. I saw a bunch of other traders on Twitter participate in this one, and it was nice. I was able to get a terminus after following the 2 trades prior to this. I was happy that I was able to kind of get a terminus locked in. But like you said, you could go through a couple weeks of trading without having a terminus hit, and you could still be profitable. Like that's the thing about this stuff, is that it's not, you don't have to be full of terminuses. I think ever since I engaged in Twitter, I've had like 7 or 8 trades for you guys, and maybe 2 or 3 of them have hit terminus. Like it's not a game of like how many terminuses can you hit. I'm saying note the sensitivity of the PD arrays, the nested PD arrays. Notice how that overlap, that little tiny overlap, look how sensitive it was with the free value gap and the breaker block low. That right there is very sensitive. And then you can see it get taken out. And we'll see what trades we have this week. Take it out, take it out, take it out. There we go. Done. So yeah, there's that. Any questions? Anything else that you guys have about that stuff, or anything that you guys want to bring up or share? Let me know. Hopefully, it says my screen share is loading. There we go. All good there? What else? Anything?
I'm not too sure if everybody's cool with this, but I wanted a little bit more theory on the bearish breaker blocks.
Okay.
Just because like I feel like we've seen a lot more of the bullish ones.
Yeah.
Bearish ones come like I guess to me few and far between, or I'm not picking it out.
Well, I think another thing too is a reason why the bullish ones are going to be clear is because we've been in such a bullish market the past 3 weeks, so it's going to be there a lot more. It's going to be there a lot more. The bullish, it's almost like looking for, it's kind of like looking for a blue marlin in a little tiny freshwater pond. Like you're just looking for the wrong things, even though they're there. But a bearish breaker, let me kind of just, in order to get to that, let me kind of show where price might have been. Or actually, I think, I'll go, instead of ES, I'll go to the DXY for a second. DXY, I think, was kind of going down. So
there is one at right there. Yeah, down a little bit down. Yeah, under that on the left.
Yeah,
right, that one.
Perfect. And yeah, I saw one in there. Good eye. All right, so you have this area right here. And then here's going to be your high, higher high, lower low. So you've got high.
Hey guys, I'm so sorry I can't help you with a gold analysis. Sorry to cut you off, Carson.
No, you're good. You're good, brother.
I'm sitting here scraping the floors of this carpet adhesive right now for this family business that we're doing.
You're good, bro.
So George, George, I'll follow up with you, bro. I'll help you out there, okay?
Yeah, he'll get you guys. So we have that, and we have this, we have this, and we have this. So we're gonna hide this. So there's that, obviously, that bullish, or that bearish breaker right there. There's the template of it. And then when we add this stuff back on, using this up close candle. So that's one area, you know, where is the draw on liquidity? Any of these relative equal lows, these are all just kind of relative equal lows that you could have targeted. Let me find another example. DXY is a little bit sloppy. I would try to see right here. Here's one. So we have a high, a low. Whether you want to use this low or this low, doesn't really matter. And then you kind of have this down closed candles in here. Overshoots it a little bit, so I think you would actually be using maybe this candle. I think it might be this candle in here. We have a low. The price comes in. This is a little overextended, but you have a high. Make a low. No, that wouldn't be it. It is kind of hard seeing these bearish breakers after you've seen so many bullish ones. I will say this, here's one, even though it's a little bit funky. You have a high, you have a low. So price comes up, makes a high, makes a low, takes out the high, takes out the low, trades back into it here. Here's the last down close candle. Even though it kind of chopped around through it, you can see the respect as we eventually, where did we displace from really was the breaker. So price comes back in and then obviously displaces from there. It's a little sloppy, but same theory still there. You know, even if you used the two candles, you used it up here, that would have been a little bit better as overall respect. But high, low, higher high taken, lower low taken, retrace back into it, and then displacement lower to liquidity. Draw on liquidity would have been this low right in here.
Yeah, I was gonna mention, do you think it would be the right thing to do to kind of like use those exotic time frames like 2 minute or 3 minute? Maybe
Yeah,
we could see it
definitely
clearer on that.
maybe. Let's go to a 3 hour. So yeah, you would have used this whole thing right here. The 3 hour provides one candle right there. You see how this one candle now it's a little bit more as it cuts through it, on the overhand of it, it respects it. You could also have a free value gap in here. It looks like most of the candle bodies respect that. Let's see if there's anything else on the DXY. Relative equal highs. Here we go. Here's one. So you have a you have a high made, lower high made, higher high taken out, lower low taken out here. These are your two highs that you're looking at to get purged. From here, and you're utilizing this down close candle. Now we're on a 3 hour, so obviously if we were to go to, let's even just go to a 2 hour, maybe?
And we lost it.
What did I do? Yeah. 2 hour kind of provides a little bit better area, but maybe it's on a better on a 1 hour or a 4 hour actually. Maybe a 4 hour. So it respects a little bit better on the 4 hour. The high comes in at 113,800. This high comes in at 113,789. So barely is able to. So that would be kind of your clear picture right there. High, or even in reality, actually, now that I'm zooming out, this would be your breaker. You've got a breaker inside of a breaker, but you've got your high, low, high taken out, then the purge, and in reality, you would have this as your breaker too. Do you kind of see that? Does that make a little bit more sense?
Yeah, I can see that. Absolutely.
Yeah, and I'm not gonna lie, like when you're in a bullish market and all you've been seeing is bullish breakers, it takes a little bit time to kind of get your eyes dialed in on the bearish sides. I'm not gonna lie. It's still a little trickier for me too. But yeah, that's kind of the same. That's kind of the gist of it. And then being able to see also the free value gap here too, the perfect fill. You've got a really easy.
Yeah, sorry, dude.
No, you're good. Really easy fill right here of the free value gap, and then you fall. You're looking for post week and pre week. Yeah, so that was post week, pre week for ES. Well, the DXY, actually, I'll give you a little bit of an analysis for DXY. So DXY weekly, basically, a couple things to add. We did take this sell side liquidity right here. Basically, what I'm watching for, I understand that we have a free value gap in here that we filled. My eyes are on this free value gap right here, seeing if price can either respect that level to go lower. If we go lower, where would we go? Watch these three lows in here. This is going to be your next big draw on sell side liquidity if dollar decides to go lower. If dollar decides to go higher, watch this for potential buy side liquidity. Watch this for potential buy side liquidity, and obviously keep your eye on this liquidity void. This could also be seen as buy side liquidity. So that's what's above us. If I were to see price basically go above and trade through this free value gap, I would want to see it act as support, and I would want to use this as an order block. Watch the mean threshold of it, and so I would want to see price obviously find support there. So that's something to watch out for, and or price could very well use this as a rejection block, use the consequent encroachment of the rejection block, and see if price starts to battle in here. See lower time frames to possibly identify which way it wants to go. That's just something to think about. So you've got this rejection block in here. You've got this free value block, free value gap in there. Also, if you want, utilize this to see how we possibly reclaim it. If we want to get it back above it, how do we use that as, you know, a reclaimed free value gap? But other than that, dollar and ES have been trading in the same direction. So I'm gonna have to kind of, until I can really get a gauge on bias, even though we have been bullish and my bias is bullish, higher time frames on ES, to really get a good solid sentiment on where and what ES is going to do for the next couple weeks, I'm going to wait and need the dollar to do the opposite. Whenever they're doing the same thing, that should have an eyebrow raise, red flag question that comes up in your head and says, wait, they're supposed to be doing the opposite, so I need something to crack. And once I can really start to see the diversification between the dollar and the ES, then I will really start to get a good idea and solid sentiment on what price could possibly do. This was an order block to me. You have both of these candles, but even using this candle, I would be watching to see how price narratively plays around it in here. That's where we closed. So I'm curious to see how we potentially play if we can get above this level. But really still kind of waiting for the dollar and ES to do opposites of each other. Once I can really start to see what they're going to do when they're doing the opposite, if ES keeps going higher and the dollar goes down lower now, then I'll start to get like a good bullish sentiment. If the dollar decides to go higher and we see now that 4,200 was taken on ES, and we are respecting premium arrays, then I'll start to say, okay, no, maybe our higher time frame is bearish. Once obviously 40/20 gives way on ES. And that's another thing too. Notice how I kind of have the levels memorized in my head. Levels that I'm looking for this week: 4,100. I don't want to see 40/20 get breached. I understand that above 4,200 that's where like that buy side liquidity resides. Stuff like that. You really want to kind of get to know your charts enough to where you can kind of know them on a number by number basis and know what characteristics have tied to that number. So this is kind of what I'm looking at for dollar. Pretty neutral in the middle on dollar. Kind of gonna let it crack that correlation on ES. But other than that, do we have any questions? Anything that you guys need or want from me specifically with regards to something, some asset class and or something with regards to ES or dollar? Let me know. Don't be shy.
I just want to say, Carson, thank you. I have to go.
All good. Thank you.
One suggestion or a question. I would love to learn about the market maker sell and buy model. If anytime, maybe next weekend or another, we can talk about it. It would be really.
I appreciate you putting in your opinion. We'll make sure to we'll add that in the topic for next week. 100%. Market buy model and some models. That'll be.
Thank you very much.
Not a problem. Thank you for joining.
Thank you. Talk to you guys later. See you.
Much love. Much love. Enjoy your Sunday. I also think too, with this being recorded, I want to keep it kind of as short and sweet as long as we get everybody's answered. I don't want you to leave here today without you having a question that you want, potentially answered. So, to kind of give you a little review, from an audio perspective, I am, still bullish on ES. I'm looking going into this week. A lot of eyes are around the 4,100 level. I want to see obviously the weekly low hold. If we do finally start to break weekly lows, I'm very curious to see how that changes in sentiment with correlation to the dollar. If we do give way to 40/20, any closure below around that 40/20 level is going to start to have me ideally think that we could potentially start to fall a little bit. I do think it's a little earlier in the year for us to potentially start to fall though, even though buy side liquidity was taken. I want to see us potentially push a little bit higher. I don't think the high is quite in yet. So I would want to see us potentially continue to take out previous week's highs and hold previous week's lows. But that is not up for me. I do not make this market. I will let price bring itself to me. Be patient going into the start of the week. We could be consolidating. We had a heavy week last week within FOMC and NFP. So don't be confused or worried when price opens up this week and we consider a range bound market maybe until late Tuesday or early Wednesday. Don't forget to check the news events this week. Actually, we will go ahead and we will check them really quick right now. Forex Factory, it's easy for me to find and easy for me to read. Basically, going into this week, I will go ahead and say on Monday the 6th through Friday the 10th, we do have nothing on Monday for United States dollar. Tuesday, we have Powell speaking at 12. Keep that in mind. And then we also have on Wednesday, Member Williams speaks for FOMC. And then around that 1 to 2 o'clock level, we have bond auctions as well as another FOMC member speaking. So a lot of Fed's talks this week, though. So maybe we won't consolidate as much. Thursday, we do have unemployment claims coming out at 8:30. So you'll be aware of that Thursday pre-market. And then Friday, we have prelim consumer sentiment as well as inflation expectations, as well as Waller speaking again on Friday. So going into this week, volatility on Tuesday, lunch hour. Wednesday, volatility around the 9:30 bell, as well as potential volatility in the PM session with the bond auction and the FOMC Waller speaking. Nothing really on Thursday besides 8:30 pre-market claims, unemployment claims, and then on Friday you have 10 a.m. consumer sentiment and inflation expectations, as well as FOMC Waller speaking. So it is actually a pretty decent packed week. Nothing crazy. For future topics, Essence would like to see SMT explained, as well as, okay, yeah, perfect. We will definitely get SMT in there as well. I like that you guys are giving me topics that will help
Hey,
me
Carson.
decide. Yes, go ahead.
I was wondering, with that Chinese spy balloon being shot down, do you think that's gonna have a big effect on the market this week?
I think you'll definitely, if anything, what I would watch is to see how we open up. That's gonna, I think, maybe have. I don't think it's gonna have any direct correlation to what happens in the market, but I think that would help some form of narrative to be built, and so potentially see where we open up, or at least what, not even ES, check dollar or check anything else that you might be trading. The week opening might be a little bit bigger than usual. Who knows? Or maybe we have some form of gap. So yeah, monitor the gap openings this week. I'm curious to see if they talk about it too, if the Fed talks about it when they start talking this week. Maybe study that if you do study the Fed talk. Study how the behavior there. But a lot of my analysis is going to be coming into the charts. What could it be a coincidence that we just took 4,200 and then that stuff happened over the weekend, and we do have a gap lower, a decent gap lower? That could possibly happen. So just kind of keep that in the back of your mind. It's not gonna sway my take on the market, though, with regards to the candlesticks and the direction that I see. But that's a little rundown on kind of my take on where and what price is going to do. I will be dropping my weekly and daily annotations this afternoon before market opens. So keep a lookout for that on Twitter. It's not going to be anything different than you guys saw here. I'm just going to kind of clean it up and give you guys just a clean annotated chart to see what I am looking for going into this week. But other than that, if anyone has any questions, please feel free to step up and ask in the chat and or talking. If not, I'll save you guys the time and I'll let you guys loose on Sunday and get this thing recorded for anyone who might have missed it or had to leave early. We are going to be recording one each week. It will be the Sunday one that we record. I may or may not find myself recording the Saturday ones eventually, but it really is just a repeat of Saturday. And yeah, if you guys have any topics, feel free to send them in. I like that we're at about 20 people. A little over, a little less doesn't really matter, but I'm gonna be devoting my time to you guys on the weekends. So really, like, if you're confused in any aspect or area in the market, I'm gonna try my best to help that, bring that to light to you, especially for like this first month, because going into March, I'm going to bring in 20 new people. That doesn't mean that, the call is going to get bigger and you'll have new people, but you'll have new questions that might help you, and or you might have some insight or tips or tricks after being in this call for 1 month that you might be able to help others as well. So the calls will get bigger, but we're taking it in bits and pieces. 20 people in 1 month, add 20 more people, add 20 more people, and then the call will get bigger, yes, but you will at least know that you had 1 month, 4 straight weekends that you could have came in here and got whatever insight. And then as we talk about more stuff, you can obviously still ask questions as time goes on too. I just want to make sure that we don't have 60 people asking questions all at one time. It kind of goes in bits and pieces. Irvin, you had your hand up. You're good to ask.
Yeah, can you go to NQ on Thursday at 9:30?
I can. I like this specific the specifics. Specific
On
time
the
frame,
1 minute chart.
1 minute. Yeah, I got you. I love it. Thursday 9:30. And that's also like if you guys need like me to go zoom into a chart, that's the best way to ask. Date and time. Right here, Thursday 9:30. Bingo. Do you want me to just kind of annotate what I see, or do you want to bring something to the light?
Oh yeah, hold on. I'm just checking something on my chart real quick.
You're good.
Okay, yeah. So for NQ, there was an SMT with ES from 9:30 to 9:49, but there was also an SMT on the lows and on the highs. So which one do you value more?
All right, here, let me bring this up then. Let me bring my compare up. So you're identifying which highs and which lows?
So you want to on your NQ, you want to go up a little bit more upper on those high level up there.
Oh, right here. I got
No,
you.
on the other side,
Oh,
right
what?
at 9:40. It starts at 9:40 and it starts at 9:30 and it goes all the way to 9:50 on the NQ chart. So
Okay,
up
I
there,
put it at 9:39.
and then yeah, higher up on the NQ if you can see, yeah,
Oh,
because it's a little bit.
yeah. So you're looking at like potentially like this.
Yeah, but then on the higher, it also made an SMT if you want to raise your NQ chart down a little. Yeah, see right there.
Yeah, I see it right here too.
So which one because I took the top SMT and then that also formed. So that was kind of confusing for me.
So to me, I would identify NQ. Obviously, if NQ is not taking the lows and it's making higher highs, it's a little bit stronger. It's gonna be the stronger pair to me. I think which one do you take? It's kind of preference. You might just only like ES, so you might figure out a way to get into ES. ES obviously has this low, and the lower low. So to me, it's like the way I see SMT is like think about ES having a little bit more gravity to it down. In a sense, it has a little bit more gravity tied to it, so it's going to take it a little bit longer. It's going to be a little bit harder to get higher, even though it will follow suit. This one doesn't have as much gravity to it. It's got kind of something pulling it up a little bit. You know what I mean? Like it made the higher high, it made the higher low. This is making the lower low. This is making the lower high, and so it's going to be a little bit more harder to find price going higher. Even though they both follow suit, this one's gonna be the one that's kind of gonna stop you out. I'm still getting a little bit better with NQ. It's not kind of my go-to pair, even though in this scenario, yes, this would be the one you would want to take. Just because if you saw this with ES, you would see ES left relative equal highs. So you would say that, hey, these are still relative equal highs, even though this got taken. To me, that's still relative equal highs because you would know that ES would probably be likely to take these equal highs, which means NQ is going to follow suit. It would have been easier to trade NQ2 because we didn't take this low in here, and which means any type of stop placement you might have had is more likely to hold rather than ES. But you're using the narrative of the relative equal highs still being intact to obviously go higher. Does that make sense?
Yeah, it did.
Okay, hopefully. And it's like a preference thing. I mean, some people will only like to trade NQ, some people only like to trade ES, some people trade what's a little bit better. But looking at this stuff, when I would have seen ES hold these relative equal highs, when I would have seen these relative equal highs stay open after this happening, I would have used that as I would identify that as confluence that price is going to go higher. And this is more so ES just kind of being in that high resistance market condition. Probably would have stopped a lot of people out in and around this level. But notice how price also, when you get this wick, you get this long wick in here, but price goes back up here, and you get none of that in here. That should not scare you as a trade. Like you should still be confident, even if you get stopped out. Find some form of entry, and then put it right back at the low because that kind of stinks. That's a sticky trade on ES when you get that long wick in there. But it's just preference. You know, if you were in Q, you would have obviously had a little bit of easier trade. But good eye, good eye. And I'll go over SMT and market maker buy models and sell models next week. That'll be a good topic to cover. And I'll identify potentially what examples happen this week. Anybody have any other questions? And usually what I'll do is I'll, when I know what I'm going to be covering, so like this week, obviously, if we're going to cover market maker buy models, sell models, as well as SMT, I'll go in and try to have certain examples lined up. Me and Henry will go try to find that stuff a day or two before so we can have that already ready for you guys. Examples where it worked, examples where it didn't work, stuff like that. Anything else though, guys?
Yeah, Carson, I wanted to bring something up actually.
Yep.
So it was in reference to George's point, kind of like talking about like the Chinese balloon being shot down, and kind of what we will see at the charts, and, you know, how we'll be able to play out. So I think I did see something on Twitter. I guess somebody posted. I don't remember who and when they said it, but they were kind of looking for, I guess, the idea of manipulation, right? For something to happen. You know, buy side was taken out on the ES, the E-minis. So they're kind of like waiting for kind of like the last burst of, you know, of buying pressure to go up, but kind of looking forward to that next manipulation to send prices going down, kind of like elevator style. And, you know, one of those things that I also did see here, and if I can look at my chart, so I'm looking at the E-mini, and I guess if you want to follow along, you could. But if you go on the daily, let's see if I can go side by side on this, so I can see where you're looking and where I'm looking.
If not, you can share the chart too. I can always annotate off your chart if you want to share.
Sure. I'm trying to figure out how I can do it. Oh, right here, share screen.
Yeah, you're good.
All right. Let me see. Let's share this one right here. All right, can you guys see my chart? Excellent.
We are here.
So kind of here, let me just erase these things here, so it could be a little more clear. But one thing that I was noting, and kind of like having it in confluence, like we already took out this buy side up here, but also one thing to note is we have this low resistance liquidity run kind of on the daily.
Yep,
right?
A single weekly low has been taken.
Yep, and we have this, you know, sell side liquidity right here too.
Yep.
So, you know, we're kind of like, I mean, I guess the way I see it, right, as a little resistance liquidity run, you know, price is kind of like respecting old order blocks or something of that nature to kind of hit terminus up here on, you know, some form of buy side liquidity. I guess just wait for that last burst. But I guess to George's point, I guess what we're looking for is that manipulation, that kind of Chinese balloon being shot down, or, you know, some famine, disease,
some story,
or some story, some narrative to kind of shoot everything down.
Yep.
And the way I see it, with low resistance liquidity run here and sell side liquidity right here resting below, I mean, to me, that just looks like the algorithm finds this very, very tasty.
Oh, yeah.
It wants to eat that up so much. So I just see it just going, just shooting like elevator down. But
it could 100% happen. I remember last year we kind of had that same idea when we had taken kind of relative equal highs on the daily back in like September, August, September. But and you're 100% right. What I have learned in my experience, because we have been bullish, I have to have some level that I see on the chart invalidated. Now we could 100% start falling off the bed to start the week because of all this stuff, but I have to have a daily swing point that has been breached, and it will always price will always it'll give you something. You might have one weekly candle or one daily candle where it melts through a lot of stuff, and that will show you it. But it's not always going to run without you. There will be lower time frames. There will be entries. You know, it's not. One thing that I've learned that has burnt me in the past is trying to catch the top. And I know that that could very well be the top. on your daily right now, we have a daily swing point that was just formed. We have a high and two lower highs on either side of it. But we also, before that, we have to see that there's a daily swing low at 4,000 with a low and two lower highs on either side of it. And so because current price has been bullish, we have to give it the time of day and say, listen, we know that sell is there. We see it. That's clear. We've been waiting for it. We've been anticipating it. But it's got to give us, we've got to give it the idea in the time of day that it could potentially go a little bit higher. It could potentially try to give one more push higher. And then from that, if it doesn't, if the discount arrays that we've been just identifying, if those discount arrays that we've been identifying on a 4-hour, 1-hour, daily, weekly, if those start to give way and they start to collapse and they start to invert and they're starting to be used as resistance, the same way we've seen all of the premium arrays be used as support the past couple weeks, if those discount arrays start to be inverted as resistance, it's time. It could very well be time. And I'm not going to even say it's time until about that 40-20 level gets close through. But I have it in my head. You know, I have that 40-20 level in my head. I have that 4,000 low in my head. And the second we close below that, technically, that last, this candle, so just don't move your chart and I'll annotate it above it. Just 1 second.
Okay.
So real quick, if we close back below this could be considered a breaker or a mitigation block. Okay, something to look forward to, right?
But I guess the key thing also to note is to be reactionary to prices. Don't predict it, so to speak.
Exactly.
You know, you want it to confirm, like, all right, it hit this level. Now I want to see it trace back or go back to this level, and I can get my entry point. I think that's a good point.
And I think like a couple weeks ago, when me and Henry were looking at these charts, it was like we were talking about that same thing, and we were like, dude, 4,200 looks so clean. But we can't predict that. We got to just react to it. We got to let the market feed opportunities to potentially get to 4,200, and we smacked it this week. But I'm telling you what seems far away, it takes one really kind of bulky weekly candle, and then it's not that far away. Hey, we could get a really big down close candle this week, and we could close at, you know, we could have a weekly closure at 39.50, and that changes the whole narrative. The weekly candle could close at 39.50 this week, and then all of a sudden we're already sitting here and we're looking at 3,800 as a potential target.
Yeah,
we're looking for a retrace higher, and we're looking for a potential 3,800 big liquidity target. But yeah, I totally get all that stuff, and it's all about how they potentially build in the narrative. Whether or not they want to use the balloon, I don't know. I don't know. The stories that they use nowadays, it's totally up to them.
But yeah, I was glad to hear that George did bring that up. It's,
I saw that.
Something
very
nice.
curious, very curious. To me, that's something that would play in at least the open to see how it potentially opens. But great advice, great eyes, great analysis.
Thank you.
Anything else that you guys want to potentially talk about? Bring up. Feel free. Henny, you good on your side?
Yeah, all covered.
Everyone good? Everyone good? This is about 3 hours, which is pretty good. That's about where I want it to be. I could sit here and I could talk forever about this and that and the other. My main concern is making sure you guys get your questions answered. And obviously I don't want to drown you guys throughout the whole day. There'll be times where I will touch on specific psychology things. I'll close that out with this. Last week, Henry was talking about how he had just gotten prop funded, asking me if there was any tips and tricks I might know. And I told him the best thing that he could potentially do is not trade his first week getting a prop firm account. Just back test. Just test, tape, read all of it. Do not press a single button. He went this entire week with all of the potential possible good trades that unfolded that he might have had a little bit of FOMO or whatever the case is. He bit the bullet, chin up, chest out, did not press a single button all week. So I sit here and I applaud you. I applaud you. That is very disciplined to do. Not a lot of people can do that, and that is why not a lot of people will get far in this industry. You have to be able to sit there and have calm, collected composure in times when you know what you need to do. There are times where you need to test yourself and say, hey, a lot of the times the biggest test will be doing nothing and just sitting on your hands. So I applaud you, Henry. I give you kudos there. You know, take this week with, you know, it's now this week is up to you. You get to choose when you want to press the button. Don't rush it. It doesn't not need to be rushed. You need to feel as if when your trade plan and your edge is, you know, there, utilize it, you know. So I wish you luck going into this week. Don't get too over your head. It's really nothing crazy. It's nothing new. It's nothing new. It's the same thing you've been doing over and over again. You're just doing it on an account, the same account. You know, treat it as demo. It's nothing crazy. I promise. There's no difference. You know, you're going to take a loss on the account. Don't worry about that. That is sure. That is sure. Whether or not it's going to be your first, I don't know. Maybe, maybe not. Who knows? It could be your first. It doesn't really matter. Yeah, everyone loses. So I appreciate you for taking my words with some weight and actually going and doing that, because I think that you'll find yourself a little less connected to the account and the idea of it all. Other than that, if anyone has anything, I will go ahead and start getting this downloaded and recorded and send out to you guys. Same email thread. I'll probably on Wednesdays or Thursdays shoot out emails to you guys, letting you guys know potential times so you guys can start gearing. I'm going to try to do them early on my side so I can kind of have the rest of my day to do whatever. If you guys do have some form of recommended time, please let me know. I will try to cater to that. Maybe it's not exact, but I will try to cater to your guys' times as well. I know you guys are all over the place. Like I said in my email, for those of you guys that are waking up early or staying up late to get on these calls, I appreciate you guys. I'm proud of you guys. I will continue to reciprocate the same energy. I'm going to put in just as much time and just as much effort as you guys are. That does not go unnoticed. So much love. Trade safe this week, and I will see you guys most likely on Trader Roundup. All good there.
See you all then.
Thank you, Carson. Thank you, Henry. Thank you, everyone.
Peace and love.
Thank you, guys.
Sunday.
Take care.
Likewise.